which is M-Pesa Kenya. And I agree with Carol that this is the reason why I think Kenya is the Silicon Valley for mobile money. So M-Pesa Kenya is a mobile payment service launched by Safaricom, which is a mobile network operator in Kenya, that went from processing roughly $1 million in average person-to-person transfers in its initial months to close to $300 million in average person-to-person transfers in the last 6 months. It's reaching 9 million customers, as someone mentioned earlier, in a country that has roughly 8 million bank accounts, and it reached them in 3 years. And it's reaching them through a network of 17,000 agents where customers can go and convert cash to electronic value to do domestic transfers in the market, and a number of other things increasingly. What's important to note is that in the first year of M-Pesa's service, it contributed about $5 million to Safaricom's revenue. In the second year, it contributed $37 million. In the third year, it was $94 million. Okay, so it's grown quite significantly, and it's quite a moneymaker, arguably, for M-Pesa. But while M-Pesa Kenya is well known, I would say that M-Pesa, in fact, the M-Pesa Kenya model is just one of multiple models that you see out there. There are a number of emerging models in mobile money and mobile financial services. And in fact, even the M-Pesa Kenya model, while it's being developed and pursued by a mobile network operator, that same model, which is mobile domestic transfer services, a wide reach, et cetera, can be developed by non-mobile network operators. And in fact, in a number of markets, we are seeing banks, for instance, developing these services. We are seeing non-mobile operators, non-banks also develop these services. But it's very early stage. They are literally, either they have launched the service in the last 6 to 8 months, or they are about to launch them. One particular interesting thing to note is one of the most interesting emerging relationships is between banks and mobile network operators. And in one market in particular, the mobile network operator has bought a controlling stake in a bank. So Telenor in Pakistan has bought 51% of Tamir Microfinance Bank. And last October, they together launched a service called Easy Pesa. And they launched this service with 4,000 agent locations throughout Pakistan that would process bill payments. And so in many ways, the service model looks very much similar to M-Pesa Kenya, but on our view, that model could look very different eventually. Because it is essentially a bank, and it's a mobile exclusive bank, you can offer a range of services. And its actual financial model may end up looking very different than a simple payment service provider. Okay. Another model that's interesting, that's emerging, is companies that are actually taking individual mom and pop stores and are converting them into a network of locations that can service multiple financial services providers. And Monica mentioned that a couple of times. These companies can do this as sort of a B2B, so they are essentially creating a network and making this network available to various financial services providers. Or they could, depending on the market that they're in, and have their own brand. So for instance, an organized retail chain like a 7-Eleven, they could do that under their own brand. And so they could offer sort of a menu of financial services when you walk into that store that they have developed in partnership with other financial services providers. Okay? And then we are seeing various technology plays in this space that are perhaps not the most important things for us to pay attention to, because they are really not necessarily the ones that are at the forefront today when it comes to reaching unbanked people. So for instance, a mobile network operator then might say, you as a bank that wants to reach my customers, I'm allowing you to reach those customers through a technology play. So I can give you sort of a nice little menu on my SIM card, and you can reach those customers can reach. Mobile operator could do that for multiple mobile network operators, which is in itself a different business model, but obviously you're still not dealing with unbanked customers. Now, while there are all these emerging models, these are 4 of them that we've put together. There may be a number of others. What OboPay might be doing with Sutash, say, General, or what OboPay is doing with UCash might be different models that are emerging. But we're also seeing things where banks are essentially developing alternate channels using agent networks. And those are not necessarily new business models. They're really a bank creating a low-cost alternative instead of a branch or an ATM. It's just striking partnerships to create a new access point for either its existing customers or to reach new customers. Okay. So while M-Pesa is well known and the numbers are quite extraordinary, the business case actually is quite unproven across all of these models. As I mentioned, a number of them are just very young and new in the industry, and so we really don't have the understanding of whether these models are likely to be commercially viable. In M-Pesa's case, we've been doing some analysis to try and understand whether that business is in fact commercially viable. And some of the stuff, from the outside, without having the actuals on the cost, some of the perspective that we've developed is that, the business is potentially doing a marginal contribution to EBITDA from anywhere from 8% to 30%, depending on how you estimate the costs. So it's 8% if you half the costs on customer acquisition, you half the costs on marketing, and you half the costs on technology. Now, this is one part of the business case for mobile network operators pursuing this kind of business model. The other part is the indirect benefits to their business. And in a number of cases, the indirect benefits can outpace the direct revenue and profits that they make from the business. So in M-Pesa's case, they're claiming that they are channeling 19%, I think, of airtime sales are now going through the M-Pesa channel. And in our estimate, that amounts to about $8 million in marginal contribution to the EBITDA. So, mobile operators, when they're designing their plans, are now looking at, a number of them are actually looking at the entire business case. That's not true for all of them, but a number of them are looking at both sort of the direct revenue they can make from this business as well as the indirect benefits that they can get. The reality is that, so while that is our understanding of the M-Pesa-like model, we don't have that kind of understanding for the other models just yet. And part of the challenge is what Carol mentioned, that increasingly across all those regulatory jurisdictions, you are seeing increasing role for banks. And ultimately, you're really seeing lots of mouths to feed in the business model. I think in India, Overpay has launched with 5 or 6 partners in the business case. So if you're not likely to see average $300 million in average monthly person-to-person transfers, how do you end up feeding all of those mouths? How do you end up making the business case work for all of those people in the value chain? And then one of the things that we've been doing extensive work on, and my colleagues who've done that work are in fact in the room, is really understanding the business case for the end agent. And this comes from understanding that you have to make it profitable for the end agent, in fact, to process those cash to electronic conversions and vice versa. And even there, I think our understanding is incomplete. For instance, the business case needn't directly come from the commissions itself. It could even come from other benefits that the small store is seeing, from foot traffic and so on. In fact, in our study, when we looked at agents in Kenya and Brazil, while Brazilian agents were making less than Kenyan agents adjusted for PPP, we found that they were in fact doing much better because they were seeing a lot of foot traffic that came from being agents for processing bill payments on behalf of banks. And then there are a number of other challenges that are related to this business model challenge, which is, getting the business to work. So we understand how M-Pesa works. Extensively is written about it. We understand the agent structure, we understand how you brand it, we understand, et cetera, et cetera. Yet a number of mobile operators are finding it very hard to just replicate that operation. And part of the reason they're finding it hard is that I think mobile operators are still stuck in the mindset that this is just a value-added service. This is just like ringtones, but in fact it isn't. And it is a banking service. It's a financial service, so they need to bring that kind of capability on board. And I think that's one of the things in the last 3 years that Roshan M-Pesa has learned to do. They've built a team that understands that this is not, I think the M-Pesa team was 1.5 person. And now it's grown to a full team that's separate, dedicated to the mobile financial services business. The other part of this sort of getting the right people on the team is getting local technology support, because there are ongoing technological challenges. And we are just in the middle of surveying mobile network operators, managers of mobile money businesses at mobile network operators, and we're just getting some of the results to understand their expectations of the business case. And the top 2 things they say that they would like to fix in order to improve the business